Hey everyone, welcome back to StockWisp. September is finally here, and if you've been following the market, you probably know this month can be tricky for stocks. Historically, it's not the strongest month, but when we look at the bigger picture right now, the economy isn't doing too bad. GDP growth is steady, the job market is holding up, and inflation seems to be under control. So, even though September has a reputation for being volatile, there's still reason to be optimistic. In today's video, I'll walk you through 4 stocks that I'm personally keeping an eye on this September, and I'll also give you realistic entry points if you're planning to invest. Each of these stocks brings something different to the table, so make sure you stick around till the end. Stock 1, PayPal. First on the list is PayPal, one of the most recognized names in digital payments. Over the past few years, PayPal has become a key player in the cashless economy. People are moving away from physical cash, and companies like PayPal are at the center of this shift. Currently, PayPal has a market cap of around $67 billion. Over the past 12 months, the stock has dropped roughly 19%, but year-to-date, it's almost flat. What's really impressive is their operating margin, which is at a record 18.2%, and their total payment volume has hit $1.7 trillion. Valuation-wise, the stock looks attractive. Its forward PE ratio is 13, which is below its 3-year average. Analysts are moderately bullish, with an average 12-month target of around $83 per share. For my personal approach, I would consider buying around the $70 range. Another option strategy could be selling a $65 put option. This could let you potentially buy the stock at a lower price while earning some extra income. Stock 2, KKR. Next, let's talk about KKR, a global investment firm that manages private equity, real estate, and infrastructure. They handle over $500 billion in assets, which is huge. The stock has a market cap of $125 billion. In the past year, KKR shares are up 15%, though year-to-date, they're down about 6%. One interesting point is that lower interest rates and potential deregulation could help improve their earnings in the near future. Currently, the forward PE ratio is 23.7, slightly above the 5-year average, and analysts have set a 12-month target of $162. For investors looking for an entry, I'd personally consider buying around $135. KKR offers exposure to multiple asset classes, which makes it an interesting choice for diversification. Stock 3, ZScaler. Moving into cybersecurity, one of my favorite themes in tech, we have ZScaler. As cyber threats become more sophisticated and frequent, companies like ZScaler are in high demand. ZScaler has a market cap of $44 billion. Over the past 12 months, the stock has jumped 45%, and year-to-date, it's up about 55%. While they aren't fully profitable yet from an operating perspective, they recently crossed into positive EBITDA territory, which is a big milestone for growth companies. Their forward PE ratio is high at 80.9, but this is typical for fast-growing tech stocks. Analysts have a 12-month target of $314, implying moderate upside. For my own investing, I'd look for a buy in the $250 to $260 range. You could also use options to earn income while waiting for the stock to hit your target. Stock 4, Lockheed Martin. Finally, we have Lockheed Martin, a classic defense stock that also pays a reliable dividend. Defense contractors tend to be more stable, and Lockheed has a long history of growth. The market cap is around $106 billion. The stock is down about 5% year-to-date. Their forward PE is 16.6, and they offer a dividend yield of roughly 3%, with a track record of 20-plus years of dividend growth. A key reason to watch Lockheed is their involvement in the Golden Dome project, which could span decades and provide steady revenue. For a long-term entry, I'd consider buying around $440. So there you have it, 4 very different stocks to watch this September. 2 in financials, 1 in cybersecurity, and 1 in defense with a strong dividend. Each has its own story and growth potential. I want to hear from you. Which of these 4 stocks do you think is the best buy right now? Drop your thoughts in the comments. Hit that like button And don't forget to subscribe for more actionable investing insights from StockWisp. Thanks for watching, and I'll see you in the next video.